New York Stock Exchange gap opened down. As we were clearly saying yesterday on stockmarketfunding.com, we pulled up the Dow, we pulled up the S&P, we pulled up the NASDAQ comp. You had a big short squeeze in 9 days of trading. Everyone went from bear to complete bull. We traded the bull up, but the bull would have to come to an end because these markets were overbought. These market pendulum swings are not justified. The unemployment number today that came out 28 minutes ago, every single economist, every single bull out there just thought they had it made and that it was wonderful from the previous day's ADP report that we thought was quite strange and manipulated. Mr. Obama will be coming out with his little debt ceiling plan. How to trade bull rallies once again, knowing when to come off of the bull rally and get on the bear side. The put to call ratio, when we put short-term bottoms in the market, the put to call, the calls were totally deflated that we would go higher. But we ran a pendulum swing where now, guess what? The put side of the market is the place to be below the floor because it's the cheapest side, and the call side is all inflated, and we have gone over many examples of inflated puts or inflated puts at the bottom, deflated calls when markets make bottom. But now guess what? All the calls are way up at the high and all the puts are way at the bottom, and that is when short-term pullbacks and corrections must come in because of the imbalances are out of whack. They are totally mathematically one way down and one way up. There is no math in the middle. That will be filled in today. We are going into July 11th earnings starting on Monday. And as I have said clearly on stockmarketfunding.com, you run these earnings up into the highs. Then when they report, you must be having put options because Google is gapping down big time this morning. Here's your gap down program trading. This gap down list on the NYSE where 60% of your program trading takes care of. I haven't seen a gap down list like this for I don't know how long. Not this deep at 1.00 qualifier ratio gap down. You just take a look at it. We could just keep going and going and going. The bull never knows when to sell, and the bear at market bottoms, bears never know when to come out either. Here is MasterCard. All of these stocks were pumped, dumped. Price action was artificial to the upside. We will see how they hit their post-bull rally lower support levels, and at that time we'll see how they come off those left elbow gap downs today on the opening bell. They're all good for trades. However, you don't want to stay the distance too long because now we're going to see just how much of this short-term, once again, short-term overbought markets, just like we had the short-term oversold rally up to here, short-term overbought must come down. And next week is an options expiration week with earnings. And the thing about it is, we chose to take the other side of their irrational exuberance. They're blowing up. Irrational exuberances do have consequences. Let's see how the emotional part of the tape will play out today by taking stop market orders out. But guess what? A bull can't keep a stop market order. No. Because they had it made in their minds. Look at, the only thing that we look at SMF, when we're short-term oversold, it's time to get long. When we're overbought as we are right now, as I have said over the last yesterday, and if you have a hard time coming to reality with that, then you go look at the live video and the live analysis before the fact. Don't give me no emails. Don't give me no humble jumble about this and that. The thing about it is what it is. The analysis is correct, and that is the reality. And now, when that tape opens up here in 28 minutes, We are going to gauge where that sentiment starts. Once again, gap open down on the NYSE. Huge. Gap open down. I'll just show it one more time here on the NASDAQ comp. Google down $13. Priceline down 11. They little pumpy dumpy yesterday way up there, didn't they? And then they sucked them all in. And then bam, you get this kind of action. And you know what? As far as I'm concerned, they deserve everything that they get. Because they could be here in this apprenticeship school and they could have been on the other side of it. But no. They do not know how to work the market correctly. Bottom line. See you in the live trading room.